You were listening to chartingwealth.com for Thursday, the 18th of May, 2017. We see that stocks are down big. The S&P 500, 1.77% for the day. The Qs, the NASDAQ 100, 2.54%. A big drop. We'll get into all that news. Plus, gold is up almost 2%, and about 1.5%. Bonds are up. And folks, are we surprised? What did we talk about yesterday on the program? We talked about how for the last going on 4 weeks at that point, we kept seeing the S&P 500 hit its head, topping out at 239 back on the week ending the 28th of April, the week ending the 5th of May at 239.72. Last week ending the 12th of May at 240, and up until where the market closed over the last 2-day candle, the high was 240.67. And then what did we see happen over the course of the day? And we'll go from the weekly chart. And again, the weekly chart, remember, has been in a confirmed down move, never changed, crossed over going down back on the week ending the 31st of March. Now, it did boom up for 3 weeks and started booming up over the course of this current week at the beginning, but it was weak. It was sliding sideways, never going above 240 and staying on the crossover going down. So what actually is going on and what happened as far as chart-wise during the course of this last candle? We saw the market blast down. It broke the 2-day trend line big time. It was actually riding on that trend line, crushed through that, dropped all the way down. The low during the day was 235.75, settled out at 238.22. Very, very volatile. If we look more intraday on the 4-hour chart, you can see the huge drop in the morning and a further drop in the afternoon as far as the Heiken Ashi candlesticks go. But it was a fascinating day. Dropped off and kept dropping throughout the course of the day. Now, if we go back to our 2-day chart, what should we be doing? Remember, we have a weekly vertical crossover going down. We've now had that happen again on the 2-day chart. It is now confirmed, crossed over, going down. So we now are moving in the same direction on the 2-day chart as the big weekly chart. So what do we do? Well, couple of options. First thing I would encourage you to do is in the morning when the markets open on Thursday the 18th, wait for an hour and check out where the markets are at 10:30 after the panicked idiot hour is over, just to see what is going on. Now, our classical way of trading is to wait for this 4-hour chart to rotate back over, to pull back, crossover going up, and then move back down again. You can sure wait for that to happen. You can also simply assess the market at 10:30, and if the market has recovered and appears to be going in an uptrend, then of course you might hold out. You can, and again, we're all about experimenting. And when drops like this occur, the market is always changing. You can do a trade around 10:30 if things still appear to be going down on your 4-hour chart, and on your 2-day chart, you might just look at entering then and jumping in for the ride. You don't have to, but remember, the 2-day chart is now going in the direction of the weekly chart. So we do want to look at getting in this. It was powerful enough to knock it over. Now, note of caution, the derivative oscillator has not been knocked over. It's not negative yet. If it starts out on the new candle negative, if it's that big a down move, that might show you some more. But again, you can stick with our traditional method, wait for a pullback on the 4-hour, then get in later, or you can wait till 10:30, assess things, and see if you have a good jumping in point at that time. Let's keep looking at things. The big damage, of course, was done on the Qs, down 2.54%. But of course, How did we get into this chart? Well, remember, it crossed over going up on the weekly chart for the week ending the 28th of April. We've had 3 going on 4 weeks of nice, clean up movement. What in the world happened over the course of the day? We look at the 2-day chart. We can see that it broke through our 2-day trend line, and we have a spinning top of sorts. A lot of down movement, a lot of up movement during the course of the day. Settled out as we look at the chart. It opened at 138, down as low as 137. As low as 136.05. Settled out at 137.79. Now we got in where? Well, we got in that following Monday somewhere around the 134 mark or so. So we're still in the green. So what do we need to do here? We don't want to lose all the green that we're in. We haven't crossed over going down yet on the 2-day chart, but it does appear to be moving that way. Reassess all of this in the morning at 10:30. Do not put in a market sell order. When the market opens, it could be crazy. There could be a bloodletting. You do not want to be selling at the market, but what you want to do is you want to assess everything tomorrow morning at 10:30 and see where the NASDAQ 100 has settled out. All right, we're going to go back to our weekly chart, and we're going to take a look at TLT. That is the 20-year bond fund, of course, as stocks were crushing down the 20-year bond fund, which was already in a weekly up move. Remember, it never crossed over going down as the market was trying to decide what it wanted to do. Never forget that bonds and sometimes gold run inversely to the market. When the market is not doing well, money typically flees into bonds or into commodities. What do we see going on? Well, we have moved back in the direction, at least the market moved back in the direction of the weekly chart. We do not have a 2-day crossover yet, but that may be coming. Continue to monitor that. If that does happen, you'll want to look at a good entry point. We had no trades running because of the divergence between the 2-day chart and the weekly. But again, if that changes over and the 2 days moving up, then you want to look for an entry point. And again, bonds were up 1.46%. That's on the 20-year Treasury bond. Lastly, we will look at gold. We will start on the weekly chart on gold. Gold is up 1.82%, almost 2% for the day. It, of course, was getting close. If you recall, we almost called it crossing over going down last Friday. Did not happen for a reason, because it wasn't meant to be enough pressure to pull it down. Popped up during the course of the day. Derivative oscillator is still in the negative. If we go to the 2-day chart, we will see that that surge up did break the 2-day trend line was broken as of the close of the candle, ending back on the 15th. But this huge upsurge, still not enough to cross over going up on the 2-day chart. So we will continue to watch and see if we do have that 2-day chart crossover going up, moving in the same direction as the weekly chart. Then, of course, we would have a trade there. Now, as we've been talking, that prescient 4-hour chart, those of you who got in when it crossed over, we've continued to see it move up substantially as it has continued to zoom up since the afternoon of Thursday, the 11th, through Friday, and then all the way through the course of this week. You have done well in gold. That is, we are at the end of the day on Wednesday the 17th as we go into Thursday the 18th. Continue to watch. Be sure to pay attention to the one that we are in with the Qs. See how things are assessed in the morning. Same with that S&P 500. We'll hold off making any calls on TLT and gold until we see a crossover on that 2-day chart. If you have questions, problems, concerns, let us hear from you. CW@chartingwealth.com. If you've not already subscribed to the newsletter, please do so. You can do that right at the website. And of course, we will have some bonus materials that we will be preparing at the end of the day for all the newsletter subscribers on Friday. So go ahead and get signed up if you haven't already. Thank you so much for being with us. Follow us on Facebook, Twitter, Instagram, YouTube. It is always a pleasure to be with you. God bless and take care from chartingwealth.com.